Hey, what is going on, everybody? Welcome back. In this month's Sacramento housing market update, we're going to cover all sorts of stats and facts, but we're going to look at housing affordability. We're going to check out where mortgage rates are and what's going on there. We're going to look at what's happening with buyer demand, and we're also going to look at what the rental rates here are in the Sacramento region. So we have tons of good information to cover. Without further ado, let's get right to it. Okay, so let's jump right into the data. We have the chart up on the screen that shows the number of homes for sale, sold, and pended, and this is going to be for the Sacramento region, including Sacramento, Placer, and El Dorado County, all single family homes. And so let's take a look at what we have here. This light green bar is going to be the number of homes for sale. That's your housing inventory. There is just over 2,000 units, and you can see that inventory has basically done nothing but go down since the peak that we saw in July of 2022. So housing inventory is still tight. There's not a lot of selection out there for potential home buyers right now. Now, this red line is going to be the number of homes put under contract or pended. And you can see that buyer activity has actually picked up a little bit. We have about 1,200 units put under contract as of January. And this is up approximately 30% month over month. But if you go back year over year, we're still down about 24%. Now, the dark green bar here is going to be the number of homes sold. We had 824 units sold last month, and this is a really low number. So we're down about 46% year on year as far as sales activity, closed escrows go. And month over month, that's actually down about 32% as well. So we did not see a lot of closings here in the month of January. Now, this chart is going to be your average price per square foot. We are sitting at $308 on average here for this region. That is down 6.1% year on year. And you could see that the price per square foot actually peaked out in April at $360 per square foot. So we're down pretty dramatically from the peak there, and year on year we actually saw price declines. Now, what's interesting to think about is as we go into the spring, we're going to see larger year on year declines because you're going to start pulling data from February, March, April, and May. And if these prices stay the same or sort of normalize here where they are today, you're going to see a much larger year on year decline. Now, this chart is really good to pay attention to as well. It shows the average days on market here in orange. Homes are sitting on the market for about 54 days. So on average, it's taken about 2 months to sell a property here in the region. And the green line is an indication of where the property is selling on average when you compare it to the original list price. So as of last month, we're sitting at 94% on average. So homes that are listed at, let's say, 100,000, which of course is not common for the area, but let's just say hypothetically for easy math, let's say a home is listed at 100,000. Well, on average, it's selling 6% below that at 94%. At 94,000 rather. Now, this is great news if you're a potential home buyer in this market because we're starting to see sellers soften up their stance as far as what they're selling their properties for and the amount of concessions that they are providing. So it gives you some wiggle room to negotiate price and terms. And in this case, where interest rates have actually gone up a little bit, maybe you can get a seller credit to do a rate buy down or offset some of the closing costs to help get you in that home a little bit easier. Now, I found this chart really interesting. There is a big divergence here between what the average home is listed for sale for versus what the average home is actually selling for. So the average list price is $809 according to the data here, but the average sale price is $591. And you could see that this gap is bigger than it has been over the last 12 months. Back in May of last year, you could see the gap was actually really tightening. So whatever the property was listed for, it was selling relatively close to that. So interesting data to pay attention to. For me, what this means is that the higher end properties are probably being listed longer. They're not closing as fast. There's more wiggle room. And then the properties that are sitting more, let's say your starter home, anything between, let's say 400,000 and 600,000, it's going to be selling a lot faster, and that pulls down that average there. And then the last chart just shows the month's worth of inventory. We already discussed inventory a little bit here in the beginning, but you can see that we're still sitting at 2.4 months. For the most part, anything under 3 months is going to be considered a seller's market. It's not going to give buyers a ton of options to choose from. In some ways, I would argue that it's also helping to keep home prices elevated a little bit because there's just simply not too much supply. Like if you just look at the basic supply and demand equation, if you have really low supply, even if you don't have as much demand as we had, let's say 12 months ago, it kind of seems as though the demand is still in a position where it's outweighing the current supply that we have in the market. Now, on that note, I found this chart from Calculated Risk that talks about single family home inventory. Now, this is on a national level, but I still thought it was interesting and worthwhile to put up here on the screen. This red line here is the inventory level that we have in 2023. And it says here that we're up 78% year over year, but we're down 45.4% from 2019 levels. So when you compare prior to the pandemic, we still had more housing inventory available than we do today. All right, now let's shift gears a little bit here. We're gonna talk about housing affordability as well as mortgage rates. I found this great chart from Sacramento appraisal blog, which I'll link to here in the show notes, but it talks about housing affordability in the California and the Sacramento region. The blue line here is gonna be California and the red line is gonna be Sacramento. So, and this is expressed as a percentage. It's going to be the total number of households that can buy a median priced home. So as of the fourth quarter of 2022, only 17% of California residents could actually afford the median price home, according to the data here. Now in the Sacramento region, affordability is slightly better, but that number came in at 28%. If you go back to affordability levels in 2006 and 2007, as we saw the great financial crisis starting to unfold, the affordability was also very low. Sacramento was just over 22%, it looks like, let's call it. And then California as a whole was like, let's call it around 14%. So affordability is not quite as stretched as we saw back in 2006, but it's not far off, and it has a lot to do with mortgage rates here today. And of course, speaking of mortgage rates, they've been a bit of a roller coaster lately here as well. Just a few weeks ago, we saw interest rates hovering in the upper 5% range. And once the new CPI report came out and the Fed came out to raise rates, the market kind of went a little bit crazy. The bond market started to price in inflation and we saw mortgage rates spike a little bit. The average 30-year fix as of today, according to Mortgage News Daily, is sitting at 6.78%. And so if rates continue to stay at this level, I expect the housing affordability to probably continue on where it's at, maybe even get slightly worse. All right, and the last chart that I want to show you here, I found it really interesting. It came right from Redfin's data center, and it actually looks at the average monthly rent compared to the monthly mortgage payment. I went ahead and selected Sacramento, California as the region. We're doing 5% down, and we're looking at all residential properties. So single family homes, townhomes, condos, things like that. The red line here is going to be your average monthly mortgage payment, which is coming in at $3,244. Now, I do not know whether or not this actually includes taxes or insurance. I'm going to assume that it does not, which means that the total monthly housing payment is likely going to be larger than this. But for purposes of discussion, that's what we see here today. Now, average monthly rent is coming in at just under $2,800. So let's call it like a $450 per month difference, roughly, in the cost to rent versus own. And what's interesting is when mortgage rates started to go up, let's say February of last year, we saw a pretty dramatic increase in those rates, and that is when we saw the price of the average monthly mortgage payment jump up pretty substantially. Anyway, I thought it was fascinating to look at these numbers because I like to look at any property that you're interested in purchasing through the lens of an investor. And so what I like to do is see where is the mortgage payment today versus that average monthly rent. So even if you plan to buy the property and live in it, potentially down the road, what would happen if you turn that into a rental property? And right now, that divergence between where the average rent is and the mortgage payment is pretty big. So unless rates come down, allowing you to refinance and or rental rates jump up dramatically from where they are today, it's probably going to take several years before rents go up high enough to where you can break even if you were to convert that property into a rental. All right, so that is going to wrap it up for this month's Sacramento real estate market update. I really hope this information serves you. Hope you found the information useful. If you haven't done so already, please consider subscribing. I would really appreciate it. Thank you so much. Take care.